Well, good morning, everybody. Like Nabil said, my name is Albert Comas. I represent MobilCash, which is a software development company. So I'm going to speak actually how we think or how we feel that the banks are perceiving mobile payments. Obviously, I'm not a financial institution. I'm not a bank, but partnering with them and working with them has given us a good perspective on what they're looking on a mobile solution. And the other thing I want to clarify is that most of our experience and most of our focus has been in developing countries, especially in Latin America. So some of the things, the learnings that I'm going to share here with you today may not apply to all the markets. So also some of the things may be quite obvious for you, but I think that, in the benefit of people who are perhaps less aware of, these solutions, I think it's a good exercise to go through. So first of all, I like to identify, what is the market opportunity and, in a way, identify one of the big problems in the region, in this case in Latin America, which continues to be cash. Cash is expensive. It's expensive to carry. Cash is very risky to carry around. So in most of the developing countries, cash continues to be the big problem. And I'd like to show you by showing you these two graphs here. One where it shows the total volume of commerce transactions in different countries and how, despite of the high increase of electronic payments and electronic transactions, cash continues to be the dominant force. I mean, countries like Brazil or Mexico, over 90% of their commerce transactions, that means everyday transactions, either peer-to-peer, business-to-business, continues to be cash. And again, that cash is very expensive. And there is a general feeling that electronic payments have increased dramatically over the last years, and that's true. If we look at the graph on the right, we can see how general purpose cards, here we're adding volume of prepaid cards, debit cards, credit cards, has more than quadrupled over the last 10 years. That's correct. What we see there is that the percentage of money withdraw with your credit card continues to be the same. In other words, in 2001, out of every $100 that I was spending on my card, I was withdrawing $60 in cash. Well, I continue to do that in 2010. Not exactly, but from 63 to 61. So the message there is people continue needing cash as much as 10 years ago. So why is cash so predominant? Well, in most of the developing countries, I think that the answer is quite obvious. It's because people are unbanked. People don't have access to that, electronic payment, to that financial service, and therefore that's the reason why people continue using cash. We see the graph there. Most of the countries in Latin America, Brazil, over 50%, almost 60% of the population still doesn't have any access to financial services or any bank account of any type. So that's where the big problem is, obviously, and I'm not saying anything new here. I guess what everybody is looking for and what everybody is realizing is that despite of this low penetration of banking services, mobile phones have reached the lowest segments of population. Mobile phones are, 100% penetration in most of the countries. So what is quite obvious for everybody, what everybody's trying to do is, okay, how can we leverage on this instant infrastructure that has already been created with all these phones out there to bring electronic payments and electronic services or financial services to all these people who already have a phone? And that's kind of like, the million-dollar question, how do we do that? How do we go about leveraging on that, mobile phone penetration? I'm just going to give you here just an example on a very particular industry. And again, working on some areas in Latin America, one of the big problems or one of the areas, the industries that it's facing a real problem with this cash handling is actually the distribution companies. Companies delivering beer, companies delivering sodas. That volume in Latin America goes over $1 trillion. So those enormous amounts of money are mostly transacted in cash. We're talking over 80% of that money is just exchanging hands in cash. So when we look at some studies, we realize that if we can migrate some of those cash transactions into electronic forms of payment by reducing, the cost of cash handling, by increasing the security, by eliminating collections, and so far and so on, we can bring savings to those distribution companies between 2 and 4% easily. So even if you don't believe me with those numbers, even if you just think that it may only bring a savings of 1%, 1% of $1 trillion, we're talking, a $10,000 billion industry, 10,000 billion business opportunity that can be reached by trying to leverage on these cellular phones, at least in a region like Latin America. So how do we go about, and how do we see as MobilCash and our experience this type of mobile solution? How do we build this mobile solution? And one of the things that we are betting or that we are suggesting is that the application, in other words, the person who initiates the transaction could be either the buyer or the seller. It doesn't matter who has the phone. I mean, we have projects where the transaction and the phone is in the hands of the seller, the merchant, the small merchant, or the distributor of that beer, of that soda. And we have other projects where the initiator of the transaction is the buyer, is the consumer from his own phone. It really doesn't matter, and we feel that the mobile solution that we provide, it should go either way, and it can work either way. Perhaps in some segments, the merchant will initiate the transaction, and in some other segments, the consumer will do. And the other important aspect of building a mobile solution is what are the payment methods linked to it. And I think that's it's a general rule that most of the mobile solutions have an electronic wallet built in. I mean, we're a software development company. Most of the software development companies, when they build a solution like this, they build that virtual wallet as a part of the solution. The question is, what do we do with that wallet? Do we keep it as it is and we find cash in and cash out locations to load money into it, or we just link it to a bank account or a credit card? The answer to that, in our perspective, is that this is up to the financial institution, it's up to the bank, it's up to the promoter of the project, it's not up to the technology provider. So in our case, our electronic wallet can easily be linked to any form of payment, being a credit card, a prepaid card, a bank account, whatever it is that in that particular industry the customer wants to do. So I guess the way that we see of building this mobile ecosystem, it will be, again, linking all these buyers with sellers, and by adding more of those, we create a higher value for all the participants. And here we're not just talking a buyer being a consumer and a seller being a small merchant. It can be a small merchant being a buyer and a large distribution beer company being a seller. So it really doesn't matter. I mean, the more people in this ecosystem, the higher value for all of them. At the same time, the more options of payment, the more value for all of them. I mean, if we just focus on doing this with one particular bank or one particular credit card, obviously it's a smaller value than if that system can just accept all forms of payment. And that's sort of how we see the building of this ecosystem. Other things that are important in our perspective about building this ecosystem are things like, the technology. Nabil has talked, early on about the different types of technology, being NFC, being, QR codes, being SMS, being Java, and he already mentioned it, and we strongly agree on that. I mean, the technology should provide as many options as possible. In our particular case, we usually offer financial institutions a combination of SMS, WAP, and Java. But at the same time, we clearly tell them what are the benefits and the challenges in each one of them. SMS not being able to be encrypted, it's a little bit more, unsafe, especially if you're sending financial information. And Java type of applications where I download the application on the phone allow for a more, for a better encryption and for in other words, for a safer transaction overall. But again, I think that it should be up to the bank. It should be up to that particular niche that we're targeting, which is the technology that we should utilize. The other important aspect is that it should work with any phone. I mean, we see some of these solutions, especially in the US, that would only work with the iPhone. It would only work with a smartphone. Well, that's great, and that makes a lot of noise. But when we're looking at tackling any of these large projects, it should work for the small prepaid phone, and it should work for the BlackBerry or the iPhone as well. So that's very important. And also, what we call the open standard. You'll see a lot of projects that rely on an agreement with a carrier, because either they work based on the SIM of the cellular phone operator, or just because the way that the system is built up depends on that carrier. Again, that may be great if that carrier has a dominance in the market, but in our experience, that is very difficult that it takes off, because rarely competitor carriers will agree on a project like this. So in our perspective, it's better to build a system that can work on any phone from any carrier without any prior, permission or agreement with them. The other important aspect is what I mentioned before, the payments. What type of payments are we going to accept? And by that, I think that building a strong relationship, a strong partnership with a large payment gateway or a large banking institution in the market is key. If we don't have, ideally, as many relationships as possible, but at least a couple of really strong partnerships with either the Visa or the MasterCard payment processor in that country, or just a large acquiring bank that can really leverage on that project. The next aspect will be the security of the transaction. I mentioned that SMS messages are generally perceived as being less secure because of the fact that cannot be encrypted. And from there, we can go through a whole set of different levels of security, and that's very important for banking institutions when handling payment transactions. So the way we see the encryption or the security should be at 3 levels. It should be on the phone. Generally speaking, the phone should be able to not store any kind of personal or financial information. It should be on the channel. That communication from the phone to a transaction server should be encrypted, and make sure that if somebody captures it, they're not going to be able to do anything. And it also should be at the level of the server, where the databases are stored, either at the bank or at the customer side. So that's very important. And finally, 2 other aspects that in our experience we see as key in the building of this mobile ecosystem. First is securing key relationships. And what I mean by key relationships, I mean strong leaders or promoters of the project. If you start a project and you have a large retailer, a large distribution company that they're bought into it, it's going to be a lot easier because their market power is so big that it's going to convince some of the smaller merchants and participants to actually join in. And the last aspect that we see important is being able to provide a real-time sales and marketing platform for buyers and sellers. And what I mean by that is that if I'm ready to buy something, I want to be able to take my phone, open the app, look at certain merchants that they are already part of the network, perhaps look at what is the offer of the day, and in 2 clicks just be able to buy that good. And the same way, the merchant should be able on real time to display those offers or those products so that all the buyers are able to look, browse through and buy them.